I gotta be honest with you, Forex scalping was really difficult until I discovered this secret. If you're somebody that's looking to become a better Forex scalper, or somebody that's tried Forex scalping but had inconsistent results, then make sure you watch this entire video. I promise you it's going to be gold. And I get it, everybody wants to know how to scalp when they're trading Forex, and it's the only thing that really makes sense for retail traders. It's a lot easier on our psychology rather than sitting in positions for long periods of time, and it allows us to piggyback on the big moves that happen in the market. Plus, the idea of being able to make a full-time income just trading an hour or so per day is pretty attractive to most people. However, most people fail miserably when it comes to Forex scalping, and I was the exact same way. I had tried to figure out Forex scalping and I would have some success here and there, but nothing was consistent enough until I discovered this. Now, just recently, I interviewed a guy that is one of the most brilliant Forex traders that I know. He's one of the most successful Forex traders in Japan. He's actually made his entire living as a Forex scalper for several years now at this point, and he makes very good money. And he literally only trades for like an hour or two per day and only takes like 1 to 2 trades every day. So here's the secret that I learned from him. The first secret that I learned from him was the fact that you don't need to be trading a whole bunch of different assets. In fact, he only trades 2 assets. He trades GBP, JPY, and he trades gold, and he doesn't look at anything else. Now, I know when I first got started scalping, I was looking for opportunities on all these different assets. I'd pull up my market watch and I had 30 different assets that I'd be skimming through trying to look for different trade setups. Now, the thing that I learned from him is he only trades 1 to 2 different assets because it allows him to intimately get to know how these different pairs or assets tend to move. Now, the second major key that I learned from him was the fact that you need to understand which assets you're trading and also at what times you're trading these assets. If we just take a look here, for example, we want to take a look when there's going to be the highest amount of volume. If we're scalpers, we don't want to be scalping in a market where it's just sitting and the price is not really moving and we're getting very small movements. That's not what we want to do. So you can come here and you can take a look at this Forex market time zone converter, and you can see the different sessions that you're probably already aware of. Now, just for an example, one of the pairs that he likes to trade is GBP JPY, and because he happens to be in Japan, and I'll show you when he likes to trade this. So you can see here when the volume is high and when it is low with this little stop sign indicator down here below. But generally what he likes to do is he likes to trade this asset when it comes around London Open, and then also he'll like to trade it during the New York Open when there's the highest amount of volatility during when London and both New York are open. The other asset that he likes to trade is gold, and generally he'll be trading gold right around this New York Open because gold is mostly going to move when the New York American time zone is open. And as you can see here, this is when the most volatility or the most volume is going to be in the market. So that means that when we're trading these assets, we aren't just sitting on our hands and seeing these tiny little movements. That's not what we want as scalpers. We want these big, quick moves that we can just get in and get out of. The next thing that we should get an idea of is the direction that we want to trade in, and we can do that by getting a higher time frame bias. So you could drop up into like the 4-hour or the daily time frame. You could use a moving average if you'd like to get an idea of the direction of the trend, and you could see some sort of structure. Like you can see right here, you know, we definitely had this acting as a resistant line, and then it's now becoming a support line. So maybe we only want to look to actually get long once we do drop down to these smaller time frames. So if you remember how just earlier I was talking about trading at the right times, well, if we take a look at this, for example, just to show you a pattern that tends to repeat itself, if we're taking a look at gold, what I've done is I've gone ahead and put on this Forex session indicator, where essentially what you're going to be able to see is the different Forex sessions that are happening. And you can see here this one that's kind of in this purple right here. This is essentially the Asian session. And generally, as a rule of thumb, we can see that there's not a whole lot of volatility or a whole lot of volume during this Asian session. As you can see here, you know, we have kind of these small candles that are in this kind of tight range. Now, it doesn't always happen to be that way, but if you look at the big moves, they generally don't happen on gold in the Asian session. Okay, again here, I've just boxed the Asian session. You can see that generally, as a general rule of thumb, it kind of ranges in this tighter range, and the candles are a lot smaller, as you can see here. You can see it here as well. Here we did have a little bit more volume, a little bit more volatility happening here. You can see that it was in fairly tight range here. You can see we're in a tight range here. We're in a fairly tight range here. And you can see the big moves tend to not happen during the Asian session. So part of what I learned is to stay patient and also to look for breakouts out of these Asian ranges. So what I learned from him is what he would do is he'd go ahead and he would draw in this box here during the Asian session, and then he'd wait to get some sort of breakout out of this Asian session range. So as you can see here, we had to wait until just this candle right here where we got this breakout, and then as you can see, the price just flied up. Now, if we take a look here, you can see that we didn't really get a break out of this range until like all the way till this candle, and then we got a nice break downward here. Take a look here, it doesn't look like we got a break out until about here, and then we got this nice break up. So what I learned is that generally he's waiting for some sort of move outside of the range of this Asian session. And as you can see here, once again, we got this massive break out of this range here, and it kind of just fell all the way back down. A couple other key distinctions that I learned from him in regards to risk management is generally he would only risk about 1% on a trade. And generally, as a rule of thumb, he would only risk 3% total in a day. And if he ended up losing 3% in a day, then he'd be completely done. And after observing his trading, I learned that he was really only trading about 1 to 2 trades per day. So I think whether you're trading this exact same strategy where you're looking for breakouts or you're looking for fakeouts or whatever trading strategy that you're using, if you implement some of this stuff that we talked about trading the right pairs, trading the right times, about it getting a higher time frame bias, looking for these patterns that happen in the market and trading when there's actual volume, I think that any Forex scalping strategy becomes a lot more effective. Oh yeah, and by the way, if you'd like to learn this specific strategy more in depth directly from that guy I was telling you about that I learned this from, then go ahead and check out the video on the screen right now.